Welcome to Weekly Market Research from Fullerton Markets. Let's dive into the latest market trends and insights. Dow Jones. Markets plunged 2 days in a row as China hit back with 34% tariffs on U.S. goods, escalating fears of a global trade war and recession. The Dow fell 2,231 points, or 5.5% Friday, its worst drop since June 2020, after already losing 1,679 points Thursday. The S&P 500 dropped nearly 6%, and the Nasdaq slid 5.8%, entering bear market territory. Tech stocks led the sell-off, with Apple, Nvidia, and Tesla falling sharply due to their China exposure. China also targeted U.S. firms with new restrictions and antitrust probes. Safe haven buying sent Treasury yields below 4%, and market fear spiked. Trump remains defiant on tariffs, raising weekend worries of further escalation. U30 USD weekly chart. Nearly 15% drop over the past 7 weeks has shaken investor confidence. Fundamental concerns have become the main catalyst for the decline. We see the 35,000 to 37,500 range as a potential soft landing and a strategic re-entry zone. Oil prices are under pressure due to President Trump's aggressive tariff moves, raising fears of a trade war and global slowdown. Goldman Sachs cut its Brent and WTI forecasts for December 2025 by $5, citing tariff escalation and rising OPEC Plus supply. OPEC Plus surprised markets by significantly increasing production, pushing oil prices down 6%. While the group remains bullish on demand, many see the move as partially aimed at appeasing Trump, who wants lower oil prices to offset inflation from tariffs. The increase may also be a warning to overproducing members like Russia and Kazakhstan. OPEC Plus retains flexibility to reverse course if market conditions worsen. WTI USD on the weekly chart shows oil has fallen below $66 per barrel, marking the lowest since December 2023. This drop has broken through a key demand zone. Since the pressure stems from factors outside of traditional supply and demand, we expect a rebound soon. Gold dropped over 3% on Friday, falling to $3,024 as investors sold bullion to cover losses from a broader market crash triggered by escalating U.S.-China trade tensions. Despite hitting a record high of $3,167 on Thursday, gold ended the week down 1.9%. Analysts say the sell-off was typical behavior during risk events when gold is used for margin calls. Still, gold remains up 15% this year, supported by central bank buying and safe haven demand. A stronger dollar and strong U.S. jobs data also pressured prices, while Fed Chair Powell warned Trump's tariffs may have larger than expected economic fallout. XAU USD on the daily chart shows a nearly 5% drop in just 2 days, which is unusual for a safe haven asset like gold, especially amid the current economic turmoil. We view this move as a retracement rather than a reversal. The 2,850 to 3,000 range presents an ideal opportunity for buying the dip. Stay tuned as we delve deeper into these market shifts and their potential future impacts. We are Fullerton Markets.